What's up, guys? As I said earlier, I gave the setup, those in the Telegram community, the buy setup, the direction, the same setup, the same criteria: directional bias, market structure, inducement, point of interest, the same, and we hit it back to back on the second day. Earlier yesterday on our previous video, we did the same setup, checking the bias, the same back to back. We repeated the same back to back today on gold. So just follow the same setup, and today I decided to do it for the second time. Do the same, repeat it the same: directional bias, market structure, inducement, point of interest. So on today's video, I'm going to do a breakdown of the back-to-back on gold setup. So just subscribe to this channel, turn on the notification, comment and like and share to others who also are just seeing just candles, randomness in the market. So without wasting much time, let's just get straight into the chart. So I wanted to do a breakdown of this back-to-back, which is selling to buy, and I sent the buyers of the buys earlier on the Telegram community. You can check it out, and if you're not in the Telegram community, the link is in the description, or you can go to Telegram and search Obed FX Academy. The art is the art symbol, right? Obed FX Academy, and join for all updates and follow the teachings. If you're a beginner, we are teaching from scratch. Don't rush trading, don't rush buying and selling. No, focus on the knowledge first. Why do we press buy? Why someone asked that you wanted to deposit and stuff? You don't know broker, you want to deposit. So we'll teach one step at a time. So last time I explained that the four criteria I used, that's what the directional bias, market structure, point of interest, and inducement. So now let's go for a clean chart and let's start all over again. Okay, so let's move straight into the chart. So this was it. I said what, as a scalper, the maximum time frame, the highest time frame I move is what, 1 hour. I only change when I'm having wicks or not clear structure. I find my bias or directional bias from 1 hour, 30 minutes, and 15 minutes. 15 minutes is the least I go to find my directional bias. On 5 minutes and on 3 minutes, I'm looking for entries, right? So as you can see, 1 hour, there is a wick here. How can you understand this wick, right? So you just have to move towards a different time frame, right? So I said you move to after 1 hour, I move to 30 minutes. So we are still on stage 1, which is what directional bias. We are still on the stage 1. When you find wicks, move to the next time frame until you find a clear structure. So before the day started, before I slept, this was what I was looking at. I was looking at this. As you can see, gold broke structure to the upside, right? Yeah. And as I said, after a break of structure, when price is moving in this structure, higher highs, higher low, when it's moving this, it will either use this which is what the breaker blocks. I explained breaker blocks, or it use what the other blocks before it's pushed outside, right? So before I slept, this was my bias. I saw gold pushing up when it broke structure. This the first pullback. After it breaks the bullish candle, the next candle is what, your inducement. So this was the inducement, right? This was the inducement, the next candle. And how high, you mark how high it went as your target, right? So that was my target. And I marked this and I slept. That's when I wake up during landing session. I'll just kill it. But when I woke up, Charlie, it was far gone. Charlie, there are more opportunities in the market. You see, price just tapped triggers and went all the way to the upside. So the same criteria, you just have to wait. If price is moving in this upside, when price breaks structure, it moves, it takes out a high. You either wait for a first pullback, and if the pullback touches the breaker block, that means the breaker block has been mitigated. So when it breaks structure, your target will be what, the other block, right? The same way when price is moving in higher highs, higher low, and when it breaks structure and the pullback doesn't mitigate, which is it doesn't touch the breaker block and it moves to the upside, your breaker block has, this is what's happened. Your breaker block is what you use for your entry. So this is what happened. It broke structure, the inducement. So the breaker block, right? The breaker block the same way. So this is what happened today. So I missed. When I woke up, I was like, oh damn, I've missed. But I always know that there are more opportunities. There are several opportunities in the market. So you don't have to waste much time. Move to the next setup. So I saw that, okay, there is a wick. Now let's dive to my last time frame for checking my bias, which is 15 minutes. Move to the next thing. Since I've missed one, okay, I saw that, oh, okay. Now 15 minutes is giving us entry opportunities. What do I mean by 15 minutes giving us entry opportunities? So look at what price did. So we check our bias. We know that price has what, it has broke structure to the upside, right? So this was the last time frame I was checking my buyers. It has broke structure to the upside. I know that what, we are bullish. So we know the entries for the buys. We know the entries. We found our buyers, we found our market structure. We know the entries. So if price breaks structure, wait for it to what, either give the pullback and move to the house upside and use the breaker block, or this is the first entry, or you just, after his break structure to the upside, it mitigates the breaker block and moves to the upside. You just use this as your entry models, right? So this was the last time frame I'm finding what my buyers. So I found that okay, price was this time, the price was mitigated the breaker block, right? But it didn't what, it didn't mitigate the other block. It didn't what, it didn't mitigate what, the other block. So I was like, okay, now the next thing I do is what, after finding my directional bias, I move to the execution time frame. I don't take trade in 15 minutes. No, we have to move to a lower time frame so that we can reduce risk. Simple as that. So the next and lowest time frame I'll be moving to take trade or find my entries is what, is 5 minutes. So now let's move to the 5 minutes time frame. What did I say? I said what, when we break structure. So we had the bias in our mind that okay, we have to be looking what, break of structure. Now the price broke structure, and we know how we enter price break structure. We know how we enter the buys, right? When price break structure, I've been saying this from the starting of video and I'm still saying it. When it breaks structure to the upside, you wait for inducement. If it doesn't mitigate the breaker block and move up, you're just going to use what, the breaker block to buy to the upside. So this happened again. This happened. Check the same thing. So when price broke structure to the upside, this was the pullback. It didn't touch the breaker block. I've explained breaker block. So it's what, it didn't touch the breaker block, right? Before pushing to the upside. And when it pushed to the upside, this was the high. When it pushed to the upside, this was the high it's made. As you can see, this is the high its price made. That's about 250 pips. So when price broke structure, it's retraced. This was the high it went. That's what you are going to target. That's about 250 pips, right? So I saw that okay, the breaker block hasn't been mitigated. So I just marked my breaker block and I send this buyers in the morning. I send this buyers in the Telegram community. I send this buyers that so always someone also asks, what about the stop loss? I almost skipped. So the stop loss, the same thing, the point of interest, below the point of interest, right? It's below this point of interest. We've talked about the TP. We are moving towards the stop loss. So this is the breaker block. You see the breaker block there, what? The green one. I said for when you are buying, the breaker block is the bullish candle and the other block is the opposite candle, right? Which is the bearish candle. And when you are selling, the other block is what, the green candle or the bullish candle, and the breaker block is what, the bearish candle or the red candle, right? So now this is it, right? I place my limit here. As I explain, your stop loss tight below the breaker block. This was around 1:3. Someone say I hit SL. Fine. Is this SL? Check. We didn't hit SL. This was straight CP. When you say I hit SL, this it should on black. When I hit SL, it should on black. We didn't hit SL. Price went straight to TP. Price went straight to TP. That's why it's on 150 pips. Quick. So someone say, oh, okay, so you gave us this buy bias. How come you had the sell bias? Okay, let's move on again. The same structure, right? So we're discussing that if price is moving in what, high, and what it breaks or it changes character to the downside. Yeah, it's changed character to the downside. It's either after the inducement and breaks to the downside, it will use the breaker block, right? So yeah, I just marked the breaker block. It will use the breaker block. So here too, price decided to what, use the breaker block, right? So here is it. If you can see in the chart, the setup I entered, it's used the same thing. So here is it. When price broke structure to the upside, and this was the pullback. This was the pullback. Yes, this was the pullback. So you know that your entries what, the breaker block. Nowhere to go. The entries were the breaker block. The breaker block is what, the entry. Right? The closest one is what, the breaker block. But here lies the case. The breaker block, you can't find the valid stop loss. Where to place your stop loss. This is where it gets, you have to add your own. This is where psychology gets in. This is where psychology gets in. Okay, so look at how price reacted at this zone. So you just have to what, respect. I also, so in this situation, I just have to respect what I respected the other block. Although they were on the same point, both of them were on the same point. They were both on the same point, but I decided to obey the other block because I can't risk. You can't predict the market. You don't know what the market can do. You see, if you are using only this small breaker block, you want to say that yeah, you're a pro, you control the market. See, price will just wipe you out. So in a situation where the other block and the breaker block, every day I'm giving key code, I'm just spitting some knowledge out. So in a situation where the other block and the breaker block are on the same zone, go for the other block. In the situation where the other block and the breaker block are on the same zone, go for the other block. So now let's go straight into it. So I marked my breaker block and I just set the limit as usual, and stop loss above the other block that is causing the shift. And as usual, 1:3. I always move for 1:3, nothing else. So 1:3. So this was a quick one. So it's a quick 1:3. So we just entered, it triggered, we went straight to take profits, nothing else. So you said just follow the same criteria. You check what your directional bias or market structure on what higher time frame, either one 30 minutes or 15 minutes, depending on the clear structure. If they are weak, just move to the next time frame. After finding your directional bias, after finding your market structure, you move to the execution time frame to find what your point of interest and your inducement. So your point of interest is what there are 2 points of interest, no matter what there are two, other blocks and breaker blocks. So it is your work to find what the valid point of interest. So the point of interest that is closest to the inducement is what is the valid point of interest. The point of interest that is not what mitigated is the valid point of interest. And when the breaker block and other block are on the same level, go for it, the other block. So I hope you enjoyed the video, and before I move on to the end, I want to just do some quick breakdown with you on my anticipation on Bitcoin, on BTC, right? So this was the directional bias I have on BTC. So you can just follow up. Either you set your limits or you follow up, but I'll bring updates, don't worry. So look at how price moved here. Look at how price moved here. As you can see, price has down, price has break structure. Look at how BTC is moving. Price has what break structure to the upside, right? The next thing I have to do is to find what my point of interest. And when price breaks structure, what do you? I said, after finding the directional bias out, we are bullish. The next thing is to do what? To find what your point of interest. And I said there are 2 points of interest. To either use what the breaker block and the other block. So here's the breaker block. This is the breaker block. So this is the breaker block, right? Now let's mark the other block. The opposite candle, the black candle, that's the other block, and the breaker block is the green one, right? So now let's decide which one is the valid point of interest, right? So after price broke to the upside, this is the first pullback. This is the pullback price made. This is the pullback price made, right? So this is the pullback price made, and what the closest one is what? Obviously the breaker block. So I just would delete this. And what's my target? My target is what? How far the farthest it went after price broke structure, the pullback. After the pullback. So this is how far price went after the pullback. So this is my anticipation on what? BTC. Just screenshot and save it somewhere. We'll come back to this. So this is my analysis or my anticipation on BTC. We'll come back to it, right? So the same analysis, the same setup. We've been doing the same thing. Just repeat the same thing over and over again. The same thing. 1:3 about what? 400 pips. So we'll meet on the next video, and I hope this video helps you. Peace. I hope you enjoyed this video. Stay tuned, click the subscribe button, turn on notification, follow up as we break down the charts. We make the charts, we don't complicate trading, we make trading very simple, right? So just stay tuned, share this video, like, comment, turn on notification, turn on the subscriber button, and see you on the next video. Peace out.